central banks are still buying gold. They're still net buyers. And the number one reason they listed they're buying gold right now was because it's the best hedge against crisis. So central bankers themselves, regardless of what they say, their actions show they are buying gold because they fear another type of crisis is on the horizon, and that gold is the best hedge against that. So it should be for us as well.
Golden Arrow Resources is targeting discoveries in a project portfolio of over 244,000 hectares, including epithermal gold in Argentina, high-grade copper in established mining districts in Chile, and a district-scale orogenic gold opportunity in Paraguay.
Welcome to Inside the Markets, flagship podcast, stockpulse.com. With me today, I've got Jeff Clark. He's a senior precious metals analyst over at goldsilver.com and was a big part of our symposium last year. So, Jeff, good to see you. It's been quite a while, and metals are in a good spot, I think, or certainly getting ready for a good spot. So I figured it'd be a good time to catch up with you. So I appreciate you taking the time.
Yeah, great to be here, Rob. Great to see you again. And yes, I'm definitely looking forward to the symposium. So.
Yeah, well, you're an author, a speaker, you're an analyst, you're a jack of all trades. So let's get into how Jeff Clark sees the environment here, the playing field. 36,000 foot view here. They tried to sell us on inflation being transitory. I think we see that's anything but the case. Inflation probably going higher. If anything else, I think we're in a good area here to combat that. So how do you kind of see the playing field here, Jeff?
Well, for gold and silver, obviously we've had a big, a sell-off, especially in the equities, right? They've just really taken it on the chin. Silver's down year to date. Now, gold is actually up year to date, a couple percentage points. I mean, not much, and it is down from its all-time high, obviously. But gold, you could argue, has been doing its job. It's up, right? And we've had basically a crash in everything except the U.S. dollar. And gold is hanging in there. Also, the World Gold Council just put out a report saying that gold priced in other currencies is actually up anywhere from 2% to 17% more in those currencies than it is in the US dollar. So non-US dollar holders of gold are actually doing even better. So now the big issue, of course, is gold is down from its all-time high, and we all think it should be doing better, and silver should be doing better as well, right? So that's really the crux of the issue. And the equities have just sold off tremendously, especially the juniors. A lot of my stocks are down very significantly over the past few months. So part of the reason is because of the soaring U.S. dollar. I think anybody who's invested in the sector knows that gold is priced in dollars and silver and is usually inversely correlated to it. So if you have a soaring U.S. dollar, it makes sense that gold and silver would be temporarily weak. You also have, in a sell everything environment, you have liquidity issues, margin calls, things like that, where things get automatically sold. So that's contributing to the weakness as well. And of course, you have the mainstream is just not really interested in gold and silver all that much yet, especially silver. I mean, silver is just completely off the radar of the mainstream investor at this time, right? So you add all those things up, and then maybe, recession, economic slowdown concerns that would impact industrial demand for silver could be part of the reason for it as well. But how I view all those things, Rob, in your 30,000 foot view question, is those are short-term temporary issues. In the bigger picture, literally nothing has changed as in terms of the reasons to be bullish on gold and silver and to own them, right? Whether it's, and I would throw in geopolitical concerns as well as a temporary, catalyst for them. In the bigger picture, you have debt that can never be repaid, at least in current dollars. You have most of the G20 that can't balance a budget since the great financial crisis, 15 years ago or whatever. So you have monetary, destruction, currency creation that's completely out of control. The World Gold Council just came out with a survey that, asked central banks why they're buying gold, because central banks are still buying gold. They're still net buyers. And the number one reason they list they're buying gold right now was because it's the best hedge against crisis. So central bankers themselves, regardless of what they say, their actions show they are buying gold because they fear another type of crisis is on the horizon, and that gold is the best hedge against that. So it should be for us as well. So for me, you have all these short-term things going on that are pressuring the price, but in the big picture, nothing's really changing. So I remain staunchly bullish on gold and silver until the monetary system is redesigned and redone. You have to be bullish, especially on gold, but on silver too.
Yeah, I always get a kick out of the dollar's rallying.
Yeah.
If the dollar was a junior miner, all the management would be in jail, most likely. All the funds raised to help the company, when you look at what they spend it on, it's destruction of the company. So I guess it's always the argument's always been best house, bad neighborhood. Okay.
That's a good point. Even dollar bulls acknowledge that the dollar's days are numbered. We just all disagree on, how soon that numbering is going to take place, whether it's this year or in 5 years or somewhere in between, right? But even the staunch dollar bulls know the system is not sustainable as it is. What does that tell you? Someone who just ignores gold, is agnostic toward gold, doesn't own gold, or even hates gold, acknowledges the system is not structurally sustainable. What does that tell you? You have to own gold here. Don't worry about the short-term temporary pressure points on it. Focus on the big picture and the reasons why you owned gold in the first place, because they're all still there.
Yeah, I always kind of make an analogy to Back to the Future here in the DeLorean, like two timelines going on there. Two things are going on. You've got a price of the metals, but if you want to go get them, that's a tough task sometimes. I know it locally here in Coeur d'Alene, they're all cleaned out. Sure, wow. You can find them, but as soon as they get inventory, it's gone. We're talking small potatoes here. But you talk to the Andy Schectmans of the world and all that, and it's a little bit of takes a minute to get it. So I guess talk about the supply chain here, I guess, if you will. I've talked to Tom Power, Sunshine Mint, and he made the comment, we have it, Rob. There's plenty of it around. It's just, it's in places that it's not easily accessible. So talk about Jeff Clark's view of, are we really running out of this stuff, or do we just have a supply chain going on, a problem going on here? We're just not able to get it.
Well, we definitely have a supply chain issue going on in the bullion industry, just like we do in other industries, right? The same factors are at play. You have increasing demand, you have low supplies, you have difficulty getting supplies, and it's more expensive to get those supplies when you can get them. So at goldsilver.com, they have, I think they're pretty competitive, but they have sometimes issues getting their hands on supply as well. Fortunately, they have they have a pretty good network of dealers they can access, but even there, it can take time sometimes, and you're going to pay more, especially for silver. So it's a real issue. So what I think is just as likely in the big picture, though, is we do see a supply concern, and it could be with silver. There are a lot of above ground supplies, right? But they're not in the form that we may need them. If you're going to have an industrial user want silver, he's not going to pull it from investment, from bullion. A bullion buyer is not going to pull industrial supplies, to make bullion. Industrial supply silver is usually in a concentrate form. It's like a gray powder. It looks like nothing, right? That's the form that a lot of industrials need it in to make a paste, for example, or something like that. So turning that into a dory bar or a coin is not easy to do, takes time, costs money, and it would drive the cost even higher. So when you have everything pinched like that, that makes it even more complicated. But again, in the big picture, I think there could be a supply issue with silver, even though there is a lot of above ground supply, because you could have a situation where demand just doesn't let up, which we've already seen, right? Despite the price, demand is still elevated. It's still high. And there's just, once the mainstream rushes in, or you have an issue with the comex, like we've seen before during COVID, right? All the, any issue like that or something even unforeseen could really pinch the supply chain even more. And of course, that could be a catalyst for the price as well. So it's going to be interesting to see how this plays out over the next year, 2, 3, whatever, especially when there's some type of monetary event, monetary crisis, whatever. And then the mainstream rushes into gold and silver. I mean, look out.
Well, I think that's what we've been waiting for. Everyone in this sector has been waiting for, Jeff, and it just seems like they never quite get here. But yeah, let's move on here. I know your family's been embedded in mining for many years there, in California and Nevada, all down there. So near and dear to you. You spend some time in the sector, certainly analyzing a lot of these companies, talking to their management here. So let's put them on the table here and analyze this thing here. So I've asked a lot of these CEOs. If you woke up in the middle of the night 5 years ago and you said gold's touching 19-ish, silver's 24-ish, like we could have got away with a couple of weeks ago, but yet your charts look like just icicles, like daggers coming down. You're on 52-week lows. I think most of them would have quit drinking. They said, that was the worst nightmare ever, but yet here we are. So call it divergence, call it whatever you will. Excuse me. What's going on here? Why are the companies failing? But the metal's still at certainly sustainable numbers that they should be having more support here. So talk about these juniors.
I think a lot of it is, investors really haven't come into the sector all that much. The only people that have really been in the sector is us, right? So you haven't seen a lot of hedge funds come in. We thought they were coming in during COVID, and they did during the COVID crash in that year, 2020. They did to a certain extent, but there was no big onslaught, right? So without them coming in, I think that's what is going to drive the price higher. When you see institutional investors that don't normally own gold or gold stocks all of a sudden shift and put part of their capital in it. Same thing with hedge funds and pension funds, insurance companies, and all this, right? So when that happens, I think we'll see a much brighter day. What's going to bring them in is if margins continue to rise. So inflation's obviously a real concern, right? Especially for the producers. But if you have inflation rising, let's say, 5 to 10% on the year, but the gold price rises 10 to 20% on the year, your margin actually doesn't just stay the same. It actually rises, even though inflation is going higher. Now we're in, this is June now. So we're, halfway through the year. So we'll see how the rest of the year plays out. But a lot of, a rise in the gold price and the silver price can solve a lot of those issues and solve a lot of those problems. And if that's what happens, then there's going to be a lot of green on the screen for a lot of these, Wall Street traders and institutions and hedge funds and that, when they start looking around for something and see, stocks are falling, real estate's rolling over, marijuana stocks are down, et cetera, et cetera. If gold and silver stocks, mining equities are the only thing left there, and they're green, they're making cash flow, that could be something that sparks, something into the industry.
Yeah, it's such a tough business, and you know this. I'm not telling you anything you don't know here, but just how important of a sector, of an industry this is to get treated like they do. And again, that's why, our efforts from here to launch a reality show, Hunting Hidden Treasures, which you'll be a part of, to show exactly that is without these guys, them and the truckers, 1, 2, no matter how you want to rank them. So I guess, I think the liquidity crunch here probably cost these guys. They did have some run-ups here. So let's play some Wayne Gretzky hockey here, Jeff. We know what made him great. He's going where the puck was going to be. Where's the puck going to be? We have, not to be a shameless self-plug here, but the Stock Bull Silver Symposium in late August, in putting those dates together, I thought either May, when they did the VRIC rescheduled, so we had to move it, or get them, either cheerlead that, which may or may not have been a good idea, or get them at the end of the summer there. So talk about where you think things are going to be at the end of the summer, because a lot of our common friends here have called some seriously high numbers in the metals. And right now it doesn't look good, but I keep hearing I'm not going to have to wait much longer. So what do you say to that?
Well, the timing is always difficult, right? There's 1,000 variables and 1,000 factors that can affect things, right? And the facts on the ground did change. We've had a big pullback, especially in the miners. So now we have to, change our projections a little bit, or maybe our timelines or something like that. But just like Wayne Gretzky's puck, he knows where it's going to be, but doesn't know exactly when it's going to get there or when he can get there, right? So there's a little bit of that going on with, trying to make a prediction, right? You don't always know the timing or the exact price, but that's okay. We know the direction where this is ultimately headed, whether it kicks in 2 months or 2 years or whatever the case may be. But I think I'm going to fall back to what I said earlier. The big picture, core fundamental reasons to own gold have not shifted. They've only gotten stronger. And so that gives me conviction to buy gold stocks, because I have conviction in where the gold price and silver price is ultimately headed. So I've been a buyer. I've not sold one mining share at all. And I'm just holding on, and because I think this fall would be a very good time for us to see a rebound. Sentiment is like a cardiogram or whatever, right? Sentiment's strong, then it's weak. Sentiment's strong, then it's weak. Sentiment was strong earlier this year. Sentiment's weak now. Guess what happens next? Sentiment's going to go stronger again. We may not know exactly what is going to be the impetus behind that, what's going to cause that, but we know that sentiment's going to shift. We know there's going to be a rebound in gold and silver. Therefore, the odds are very high there's going to be a rebound in gold and silver stocks too. And I'll be talking a lot about that at the Silver Symposium. So one more thing I'll mention just real quick, Rob. Seasonality might be in play here because ironically, if you average the gold price every year over the past since 1975, the July 4th weekend is ironically one of the lowest points of the year. Now, January is the lowest, but there's always tends to be a pullback in late June, early July for gold. And the silver price, the low of the year for the silver price on average is June 29th, coming up here in a few weeks. Now, seasonality doesn't play out every year, right? It only plays out about 2 out of 3 years. So 1 out of 3 years, it doesn't play out. But it's very interesting that those are the low points of the year, and the strongest months of the year, especially for gold, is September. So your conference could be very timely.
Yeah, well, you made some good points there, and inflation's here to stay, and I think these miners are on sale. So we should.
They're definitely on sale. Absolutely. Yeah. In fact,
I'll
tell you, Rob, some of my biggest wins have come from, buying the sell-off, from buying the panic. I bought in March of 2020. I bought silver at least twice. I bought a whole slew of mining stocks, and by August of that year, my portfolio had gone 4x. Not a couple stocks. My entire mining portfolio went 4x by that time. So for those who are not fully long and want to be longer or want to consider actually jumping in now, this is a time I would be doing that. Let's put it that way.
Yeah, if I always said, if some of the best stocks to go buy are the ones you already own. So a good time to average down, and if the story is not broke, and that's the thing is, if the story is broke, fine. But if the story is not broke, then just suck it up. And I think you painted a picture for a rosy August. So Jeff, I'll look forward to seeing you. So how do people keep an eye on you?
Well, I do work with Mike Maloney there at goldsilver.com. You can see there. So it's fun working with him. They have a free newsletter. You can get all our publications and research and reports and articles and all that before we release it to the public if you sign up for the newsletter. So I also write sometimes for Silver Chartist. That's silverchartistadvisor.com if anyone wants to check that out. And then I do disclose my mining picks on Twitter at @thegoldadvisor.
Okay. We'll certainly keep Ryan, and I appreciate the time, and we'll look forward to seeing those predictions come true, and look forward to seeing you here in August. Jeff Clark, he's senior precious metals analyst over there at goldsilver.com, Mike Maloney and team, fine operation. So Jeff, thanks for the time. Look forward to checking in again.
Yeah, we'll see you in a couple of months, Rob.